questions in the chat for us. Now, without further delay, I would like to introduce our wonderful speaker, Kelvin Tran. Kelvin is a senior accountant specialist at Ownr, specializing in helping aspiring Canadian entrepreneurs launch their business properly the very first time. Kelvin's experience working with startups like Applyboard allow him to provide seasoned and timely advice. His genuine interest in the startup landscape of Canada is truly an asset to not only Ownr, but also to the startup ecosystem. Kelvin, it is a pleasure to have you here to facilitate the workshop, and I welcome you to begin the session.
Awesome. Thank you so much, Alina. Thank you for that introduction. And hello, everyone, and thanks for taking some time out of your evenings to join us today. As you said, we've got a little bit of a jam-packed agenda, but I want to start off obviously introducing myself. As Alina mentioned, I'm an account specialist here at Ownr, and a lot of my role is really around working, on the daily with entrepreneurs like yourselves in all stages of their business journey, from just having an idea and wanting to figure out what comes next, to maybe established companies looking to help grow their businesses a little bit more, looking for funding, bringing on investors and things like that. So I honestly believe it's a privilege for myself to be in this role, speaking with folks in all walks of life and getting to hear their journeys day to day. So I'm definitely excited to learn a little bit more about the folk who we have with us on this call today, and what we can share in terms of resources and support in terms of helping you get your businesses further along, or even just getting started as we move forward here. So we do have a little bit of a poll that we wanted to share with the group, just to get a little bit of a pulse. As Alina mentioned, everyone's coming, into the session, and you're taking the time to join us. So would love to hear just if this is applicable to you, and if not, throw your comments in the section. But where do you find yourselves in terms of wanting to start a business? Are you, in the ideation stage, just thinking about wanting to get going? If you're not sure, just here to learn more. That's what we're here to tackle together. You plan to incorporate, you're thinking of a sole proprietor, already a business owner. Yeah, I see the numbers coming in. Got a good mix all around. We've got some folks who are just here saying, hey, I just want some more information out of this, and I'm more than happy to provide that. A good number of folks in the ideation stage as well. And yeah, okay, it's looking pretty good so far. We got one person here who already owns a business, so definitely a little bit further ahead in that sense. And I can certainly speak to how Ownr can support existing businesses as well. So this will definitely still be relevant for you all together. We'll give it maybe another 5-10 seconds. A quick little vote here, but we've got a good mix. So I'd say about, I guess, 7 of the 11 folks who have voted ideation or not too sure. We're talking about the early stages, and I'll chat about sort of the things to consider, right? When is the right time to incorporate? We're getting around tax season very shortly. Registering a business is often top of mind at this time to potentially take advantage of tax benefits and things like that. So, okay, I think we're good to go for the poll. So yeah, we've got a good, again, about half the group here responded, and that gives me a good indication of what we can share here. So I will go ahead and share my screen, and give me 1 second here, and hopefully everyone is able to see the presentation. Perfect, thank you, Alina. We're going to dive right into this. Like I said, we've got a jam-packed agenda for us this evening. I'm going to talk about some of the business structures that we have here in Canada, how you can, of course, register your business through Ownr. I'll take you actually through a little bit of a demo of our platform to show you step by step, what does it look like to actually register your own business through Ownr? What are the benefits of doing it through us? What are things you need to consider after you register your company? As I hinted earlier, for some of the existing businesses, what are things that you might be missing out on, or how can Ownr still be able to help you with your existing company? So we'll chat about that, and then definitely highlight some resources that are available to you through Ownr, in addition to, of course, everything that Alina highlighted from Yspace that's available to you moving forward. So starting off with business structures here in Canada, there are 3 main types of businesses that, business structures that you can set up here: a sole proprietorship, a partnership, and a corporation. There are a couple other types of businesses that you may be familiar with, like a nonprofit organization or a professional corporation. With those specifically, those unfortunately aren't available through Ownr, because they do require a special level of attention and detail when it comes to the registration process. So through a lawyer or through the government portals, that's probably your best bet. But in terms of where Ownr can support, it really is going to be either a sole proprietor or an incorporation. And we're going to talk about the spectrum to which these types of businesses where it lands on the spectrum and sort of what are the benefits of each, and what are some of the reasons that you may not consider it altogether. So starting with a sole proprietor, I think some of you have alluded that you're in the ideation stage, and this is probably one of the common questions: do I go with the sole proprietor or do I incorporate? Right. So for a good chunk of the folks on this call, what's the difference? A sole proprietor is really straightforward. It's really simple. It really is you deciding to do business as yourself, right? It's simple. You can register a business name if you wanted to. So if I started selling, t-shirts on Etsy or Shopify tonight, I'm effectively operating as a sole proprietor. That's all that really needs to happen. If I wanted to call it Kelvin's T-shirts and work under that business name, that's what I could do. And I would register that business name as my sole proprietorship, but that's pretty much the only difference, right? When we talk about no separate taxes, all the money I make or lose, quite frankly, as a business owner, that is tied to my personal income. So as I said, as we get near tax time, as a sole proprietor, if you're operating one already, you are going to recognize that, you'll see all of that when you do your personal income tax, and there may be higher taxes that you're paying altogether. So those are certainly some things to think about. But at the end of the day, it's you doing your personal taxes with all of the income you bring in as a sole proprietor. It's not too costly to get started. It's actually quite cheap altogether. With Ownr, it's actually one of the cheapest ways to register a sole proprietorship. We are actually at a lower cost than the government. So I just wanted to call that out. If you believe a sole proprietor is the right fit for you, it's $49 through Ownr. And if you actually open up your business bank account with RBC, you get $100 back. So you might even actually make a little bit of money. So if you're thinking about the sole proprietorship route, Ownr is definitely the place to start. So why would you not consider a sole proprietor, right? So this is where we get into that legal difference between you and the business. As a sole proprietor, you and the business are one and the same, right? There's no difference between you and the company. If anything happens to the business, you are personally at fault. So you're personally liable, right? That second point right there. You have unlimited liability to the company. So your house, your car, your money, things that you personally own, would be liable if something were to go wrong with the business altogether. There's also a lack of continuity, right? So as a sole proprietor, it is you and yourself, and you are the business. The minute that you decide to stop running the company, and this is something that's no longer something you want to move forward, the company is done. There's no passing it on. There's no giving it to someone else. It really lives and dies with you. The partnership is pretty much everything that I just highlighted with the sole proprietor, except there's more than one individual involved. So it's 2+ people, but all of the characteristics that we've highlighted, from no separate taxes, being accountable to all the profits and losses that you take in, unlimited liability. The only additional piece is a partnership agreement is required, because that's going to really flesh out what your roles are going to be with your partners in starting this business, making sure that the terms are agreed upon. So there's that extra level of documentation to help confirm that, hey, this is a partnership venture that we're joining into between multiple individuals. But aside from that, all of those pieces are still very similar to a sole proprietorship, as we've talked about. So now we're going to jump to the other side of incorporating, right? Why would I consider incorporation at this time? So there's a lot of benefits to speak to. So the first and foremost is you are setting up a separate legal entity. So by all accounts, your business is essentially a legal person. It can open up its own business bank account. It can sign contracts. It can take out loans. It can be sued. It's basically like a person. So it really is separating yourself from the company, right? That liability protection is what comes into play. I often talk to folks in different industries, and I'll talk about that very shortly, but we talk to folks in different industries where it really makes a lot of sense to incorporate your business because of the level of risk you take on. So by having that liability protection, as I mentioned earlier, your house, your car, your money, those things are protected if something were to go wrong with the business, right? And that's a level of comfort that folks often enjoy, especially if they are operating in higher risk areas of work. We'll talk about ownership as well. As a sole proprietor, as I mentioned, your company lives and dies with you. Ownership is transferable with a corporation. So you issue shares, which is a unit of ownership, to yourself, to your partners in this business. And if you ever decide to leave the company, you can transfer and sell your shares to someone else, and someone else can own the piece of the pie, right? If you think about it that way. So ownership in a company is transferable. It can outlive you, it can outgrow you, it can be something that is tangibly moved as an asset in that sense. It's easier to raise money as a corporation, a little bit more credibility. I talked to someone yesterday who said they needed to incorporate to access a certain level of funding, right, through a certain program. So some incubators or some partner programs require you to incorporate in order to receive funding. So that might be something you want to consider. And then tax advantages, as we've talked about. Just broadly speaking, incorporations are taxed at a more favorable rate than you and I as individuals, right? So just generally speaking there, you could potentially save on taxes because that's not all personal income anymore. That's money that goes into the business. You're allowed to reinvest it, keep it growing in the company, and take it out to pay yourself if you need to. But if you don't, you may find some tax savings there altogether. Would strongly encourage you to, of course, speak with your accountant to figure out where that sweet spot is for yourself. So then with all these amazing things, why wouldn't you consider incorporation? Well, the first might be cost. And that might be, I'd say it's arguably a misconception these days. Folks think that it's quite expensive to incorporate a business. And it can be, depending on where you go, right? So I've heard folks say, hey, I spoke to a lawyer, for example. They said it's about $3,000 to incorporate. And I kind of, shake my head a little bit because with Ownr, we've made it a lot more affordable to incorporate your business. Folks here in Ontario, you're looking at $500 or $600 to register your business. I didn't highlight this at the beginning, and you may have seen this in some of our preamble, but Ownr is actually owned by Royal Bank. We are an RBCX company. And as a result, if you set up your business bank account with RBC, you actually get $300 back. So you're looking at either $200 to $300 after the rebate to incorporate through Ownr, a lot more affordable than it used to be when options like Ownr didn't exist, and you really had the traditional routes of either going to the government or going through a lawyer. Right? And the one thing I will say as well is by going through the government, you actually don't get your full incorporation process complete. They only take care of half of what's required. So there's that second piece that I'll highlight very shortly, but Ownr takes care of that. There are separate taxes that you need to file, as we've talked about. So that might be a little bit more paperwork, a little bit more cost, but in the long run, you'll likely be saving some money, as we talked about those tax advantages, if it makes sense for your financial situation. So those are the pros and cons of kind of why you might consider incorporating a business. And it's really important to kind of take into account, where do you find yourself right now? If anyone here is thinking, hey, what can I start as a sole proprietor and then move to an incorporation? It's sort of a yes and no type answer. So ultimately, a sole proprietor and an incorporation are two distinctively separate entities. A sole proprietor has its own business number, has its own tax number. If you are to then incorporate after, you're ultimately starting a new business. Folks often ask, well, can I transition over? Can I make the switch? Like I said, it's a yes and no answer because despite it being a new entity, you can carry the name forward if you want to. So if you register a company like, Kelvin's Food Delivery as a sole proprietor, and then down the road I decide to incorporate, I can transfer that name over and operate my incorporation through that name. But I will be setting up a new business bank account. I will be setting up, I'll get a new business number and so forth. But it is possible. And around tax season, as I've talked about, this is often the times folks who are operating as sole proprietors will look towards incorporations because they do their taxes and then they realize they paid a lot more than they would have liked. And then they look at incorporating to potentially save on some of that. So generally, it's a simple process. The only time when it might be a little bit more complicated is if that sole proprietor has accumulated a lot of assets, a lot of machinery and equipment and inventory. Then it might require something called a Section 85 tax rollover. And that's, again, when we would encourage you to speak with an accountant. So yeah, I've been chatting a bit. I don't think there are any questions just yet, but I would encourage folks to, again, drop in questions throughout the chat, and I'll definitely take some pauses here and there based on some of the content that we're going over today. So one of the main comments and questions that we often get is, when is the right time to incorporate my business? Maybe you've been working as a sole proprietor for some time and you're thinking, is this the right time? Or maybe you're just looking to start the business, but trying to figure out that timing. So again, we've touched on these 2 points already, but just to take a little bit of a deeper dive in here altogether, that spectrum of risk that I was alluding to earlier, that's going to be one of your main considerations for whether or not you should incorporate right at the beginning, or maybe you can start off and then explore incorporating down the road. It's not a matter of if, but usually when, right? When it comes to incorporation. So as an example, again, if I'm selling t-shirts, if I'm a marketing consultant, as it says here, the work that I do is relatively low risk. As a marketing consultant, for example, you might be building websites for clients, you're interacting virtually for the most part. There's not a lot of risk involved with your work. But if you are a moving company, if you're doing construction and trades and home renovations and you're working with heavy equipment, there's you're on site and you're working with other people's properties and things like that, that's where something could go wrong. The likelihood of something going wrong could be greater. And as a result, again, we talk about that protection of your own liability where you don't want your house, your car, your money, your things that you personally own to be at risk. So you might consider incorporating just to give yourself that protection, right? So that's one of the main things to consider. If you find yourself somewhere in the middle on the spectrum, it really is a question to ask yourself, can you play it safe? Is this something that, you evaluate the risk that you're basically going through, but this is generally a good space to kind of look at to say, if you're on that higher tide and that higher side of risk, it's probably a good idea to consider incorporating your business right off the bat. When it comes to taxes, again, we've already touched on this a little bit, so I won't, beat a dead horse, but corporate tax rates generally lower than what you and I pay as individuals. So by keeping more money in the business and allowing it to reinvest and grow, and not taking it out so that it's not dinged on your personal income tax, that keeps you personally in a lower tax bracket and allows you to kind of allow that money to grow more, as opposed to, again, a sole proprietorship. Everything is personal income. You make $100,000, you're dinged at $100,000, for your personal gross income. So that's something to definitely think about. I think just a couple more slides and then I'm going to go into the demo. But if there is one thing you take away from this presentation today, it's going to be this slide. Incorporating is a two-step process. Step one is going through the government. Everyone knows that. They say, oh, I can just do it myself. I'm just going to go to the government to register. That only provides you your certificate and articles of incorporation. There is step two, your corporate documents, things like your bylaws, your issuances of shares, your director resolutions. These are corporation documents that are legally required that the government does not provide you. In the past, you would have to go to a professional service, you'd go to a lawyer to get this done. It becomes more timely, more costly altogether. Ownr takes care of both of these for you as part of the incorporation process. And that's the part I want to highlight. Again, folks will just say, I'm going to do this on my own. You are effectively missing half of your business. You don't own your company if you don't issue shares to yourself. And these are the conversations I have on the daily where I talk to folks, and it's really important to understand it is a two-step process. It's not overly difficult, but it is important to do. Having a minute book, whether you're a one-person business, and I get that feedback a lot, well, I'm just a one-person company, do I really need a minute book? The answer is yes. You want to make sure that you issue shares to yourself so that you own the company, appointing yourself as director, making sure you have bylaws. If you ever get audited, if you ever try to sell your company, these are important documents to have on record. So the last thing I'll highlight before I maybe check on some questions and then jump over to the demo is going to be, what are the things you need to consider when incorporating? Folks may have heard of what's called a nuance search. That's really just checking to see if your business name is available. So that's something that's actually built into the Ownr platform, and I'm going to show you that in a second. Setting up your share structure and your shareholders, who is owning the business, who is going to be taking part in the different levels of ownership, voting shares, non-voting, and so forth. And then who are the directors and officers, right? It's not just a one-person business anymore. There's different roles. Some folks are investors. Some folks are actually helping operate the company. Where does this play when you have multiple people involved? So we're going to dive into all of that and talk about how to incorporate on Ownr. So I'm going to jump out of the presentation, but I'm going to also see,
Kelvin, there's a question
Yeah.
in the chat. Cecilia is asking, what is the difference between corporate and personal tax rates?
Yeah, that's a great question. I don't have the exact numbers, but as I've been alluding to throughout the call here, corporate tax rates are just at a lower rate than our personal income tax, right? Here in Canada, depending on how much money you make, the more money you make, the higher tax bracket you ultimately fall into, right? When it comes to your personal income. When we're talking about incorporating, all the money you make is corporate revenue, right? It's business revenue that's coming in. And that in and of itself is taxed at a lower rate than what your personal income tax generally is. So that's what I can speak to on that side of things. If there are obviously specifics that you're looking for in terms of how this might impact you and where you fall in the tax brackets, that's definitely an accounting question. But it's also something you can probably Google just in terms of like tax rates that are applicable to you and where you live. So that's yeah. Thank you for dropping in that that resource there, Lee. So yeah, that's definitely something to check out. But again, for anyone's personal situation, speak with an accountant to have the best picture of whether or not it makes sense and whether or not you'll actually save on taxes. So, yeah, Alina, was there anything else there to
Great.
highlight?
Yeah,
Yeah.
I actually, before we move on, there was a
Mhm.
question that one of our attendees sent in. She can't make it today, but we'll be
Mm.
reviewing the recording later. And the question was that what are some of the key considerations when moving from sole proprietorship to incorporation? I know you
Yeah.
touched upon it, but if you could just dive into a few details. She's a sole proprietor. She has a sole proprietorship right now, but needs to know when is a good time to move into incorporation.
Yeah, that's a great question. And a lot of so hopefully whoever asked that question and you're watching this, hopefully a lot of the content that we've covered already answers that. But again, when you talk about a sole proprietor moving to an incorporation, and you're asking yourself when, you really look at what have you done as a business altogether, right? And when you answer the questions of are there tax benefits, right? Or are you getting more business where there's a greater level of risk, dependent on the industry that you're in? These are questions that you can definitely ask yourself to determine whether or not it makes sense. Like I alluded to earlier, as a growing business and as a business that sustains over amount of time, it's not if, but really when, right? Because at the end of the day, as a growing business, if this is your full-time job, right, or if it's your part-time job, there's reasons to incorporate on both ends. So what I would say is, take a look at how long has this sole proprietorship been active? Are you paying more than you need to in taxes? If so, that's already like a pretty obvious answer as to why you should incorporate. And if you're just making a little bit of money and it doesn't make too much sense just yet, in your opinion, or after speaking to an accountant, you can take a look at, again, some of the benefits, right? Incorporating really separates your business from yourself. So there's a level of organization that provides as well. In addition, again, to access to grants, access to funding, it really is allowing you to operate an entity in that sense on its own. So that's probably what I can say to that front. Again, the process itself isn't too difficult. You're ultimately setting up a new corporation. If you want to keep the name, you can definitely do so. And it really is just incorporating the business. Then you can start moving, if you have existing contracts, existing vendors, move that over from yourself over to the company. So instead of doing business with Kelvin moving forward, the vendors are going to start doing business with Kelvin's corporation, right? And that is an important distinction to make when it comes to how people pay you, how you do your billing cycle. So there's a lot of nuances there, and then you kind of eventually close down the sole proprietorship over time.
Great. Thank you so much
Yeah.
for that.
Yeah, I see there's another question in the chat, so I'm going to jump to that. And again, keep feeding in these questions. I love it when questions come in. Definitely makes it a little bit, less boring in terms of just going through the slides here. So, can you have a corporation own parts of a new corporation? Can you register new corporations via Ownr? Great question there. So, yes, a corporation can own another corporation. I'm going to stop sharing my screen just so that I can kind of see everything here. Perfect. So, yeah. You can have a corporation own another. So if that business is already existing, when you get to the shareholder section, this is a great question that I'll actually show you when I do the demo, but you can have a business ultimately be the shareholder, right? So rather than a person own the company, this happens quite often. People have holding companies and things like that. You can utilize that corporation to own parts or the whole business in that sense. And then can you register a new business with Ownr? Absolutely. And that's exactly what I'm going to show you in just a few minutes here. If you have multiple businesses, do they need to have different business numbers? That's a really good question, and I actually want to speak to this right now because that's a question that I've been getting a lot more over the last few months, which is I want to set up a business, but I want to run multiple businesses. How do I do that? This might be a question that's relevant to some folks on this call as well. There's a couple of different ways. There's no right answer. It really comes down to obviously you as an individual. But so to answer Celia's question directly, If you have multiple businesses defined as corporations or sole proprietors, then yes, those would have different business numbers. But so that would involve, again, just registering multiple companies, right? That's what that would look like. Another way that folks have been looking at setting up multiple companies is setting up one corporation and then filing trade names, which are also known as operating names or doing business as DBA, filing other business names under the corporation. So you think of it as an umbrella where you have a corporation and then you have different business names under it. Because it's almost like an alias where you can use that operating name and that's what your clients see. That's one way for folks to do multiple businesses under one company. So it's one bank account, one business number. But when you have multiple lines of businesses, they all kind of funnel into the same company. So I might be selling t-shirts with one business and then I might sell stationery items, right? But calling it, Kelvin's t-shirts might be off-putting for people looking to buy stationery. So I register a trade name under my corporation called Kelvin Stationery because I'm super creative. And then you start selling stationery items with that business, right? So that's what people recognize you as, but all that money is coming into the same business. So those are the different ways that folks have been kind of approaching this. Again, there's no right answer. It really comes down to a level of organization and how familiar folks are with just managing multiple corporations, or if you want to keep it all under one umbrella. So great question there. It kind of took me on a little bit of a tangent, but I know that's a question that folks often have. So I will jump back over to the demo, but these are, can you have multiple trade names under one corporation? Yes. Great question there. So I'm going to jump over to the presentation, but keep those questions coming in. I'll definitely get back to those as soon as we wrap up the demo here. So if you are on the Ownr platform, ownr.co, and you see the giant purple Get Started button that we have on our homepage, click that. That'll take you to a page that looks like this. And like I said, if you have an existing business, I'll touch on this very shortly. But for this exercise, we're going to set up a new corporation. We're going to be based in Ontario, and then you can choose between a sole proprietor or an incorporation. So for all intents and purposes, we're going to go with a corporation here, and we'll come up with a company, KT Food Delivery. Actually registered as an Uber driver not too long ago, so this is interesting. So yeah, so as you can see right here, there's a green check mark. It says that your name satisfies the legal requirements. So this isn't a 100% guarantee, but our platform is tied to the government database. We're able to let you know if your company name is already taken, if it's too similar to another one that already exists, or if it doesn't have enough description or distinctive terms. Because a good corporation name has a descriptive and a distinctive term, something that makes it unique, and then something that tells you a little bit more about what the business is doing. If you have that in your company name, that's usually a good indicator, right? You would click next, and then that allows you to go through our application flow. I'm just going to take you over to this tab and show you that under your account information, you just put in your personal contact details. Under your corporate information, this is where you can choose to set up a business. In Ontario here, we can set up a federal or provincial incorporation. Truth be told, there's not a huge difference between the two. With a federal incorporation, it's $100 cheaper. The name of your business, if you go with a named company, is registered across the country instead of just the province of Ontario. And there's a little bit more paperwork at the end, but Ownr helps you with a lot of that. Aside from that, there are not any significant differences between provincial or federal incorporation here in Ontario. You can still do business across the country. You can still do business internationally. Provincial and federal does not restrict where you can have clients and do business. So I just want to get that out there. Under your registered head office, this is obviously a registered Ontario address. Select the industry and then select your fiscal year end. So fiscal year end is going to be your tax year. Most folks choose December, keep it clean at the end of the calendar year, but some folks may want the full year. So let's say it's March 1st already, and I chose February. That means starting tomorrow, March 1st, that's my first date of the year, and it loops until February 28th of next year in 2024. So I still get a full calendar year for tax purposes. After that, again, here you can go with a numbered company or with a named company. So like I said, as we've kind of talked about here, distinctive and descriptive terms are sort of what's required for a corporation name. Now we're getting into the meat and potatoes of setting up the company, but it is actually pretty straightforward. So after all of that is filled out, if you are a one-person business and you are operating this company by yourself, you would simply say by myself. We would make you automatically the director, the president, and the 100% shareholder of the company. You click next, and it takes you right to the checkout page. Some folks often are like, that was way too simple. Is this even legit? And that's feedback that we get all the time, but it is, because it really is that simple. Like I said, our automation kit takes over. We help prepare the legal documents that are required to help fulfill you in all of those roles. But let's say there are multiple people involved in the company, right? So you would then say, I'm setting this company up with others. These other folks are owners and managers. And then when you click next, you're able to then actually input. So let's say I'm working with Justin Bieber, right? And the two of us were starting a company. We're both going to be directors of the company, so we're both overseeing the management of this business. Same thing with the role of officers. The only required role is the president. From there, you can create other internal roles like VP, CEO, CFO, anything that relates to obviously how you want to conduct the day-to-day operations of the company. And then last but not least, it's your shareholders, right? As we've talked about, the owners of the business. So let's say, again, our good friend The Rock there as well. But let's say you have got a business and, again, it's a 50-50 split. You can just simply do it this way, and you have half the ownership between two people. We also have our advanced mode where you can actually go in and adjust your share classes, right? Share classes, the analogy we often use is like floors to a building. As you build your building, you can add as many floors as you want. So you can create different share classes, whether you're putting family into your business, whether you are planning for future investors, you can create common shares, voting, non-voting. You can really dive into the details there. All of that is possible through Ownr, but if you need advice on that, again, speak to an accountant. Once you have your share classes set up, rather than allocate a percentage, you're allocating a quantity of shares. So if we do it this way, 1,000, 1,000, it's still 50-50, but you get a little bit more customizability in terms of how many shares each person gets. So that's incorporation with Ownr in a nutshell. Again, I know I rambled a little bit there, but that ultimately took us maybe 5-10 minutes altogether, right? So it is really that simple to register at least putting in the information that you need. And then it's really about choosing a plan. So obviously by attending this call, there's a promo code at the end for everyone to utilize upon checkout. If you do decide to incorporate through Ownr, that I believe gives you about 20% off the Ownr fees. But just to quickly highlight, what's the differences between these two? The lower tier plan, this is what I often call our starter package. If you're just looking to incorporate your business, making sure that it's fully compliant, has all the legal documents, this is the plan for you. It's $499 for a federal incorporation. It renews at $200, and folks often go, well, why is there a renewal fee? Blah, blah, blah. The renewal fee is often to cover your annual corporate return. Your annual corporate return is different from your tax return. So again, your accountant's going to be helping with your tax return, but your corporate return is a legal filing that needs to be made with the government every year to keep your company compliant. It involves things like asking if you had a shareholder meeting, if you've appointed an auditor, if you've made changes to your directors, right? So these are things that the government needs to know, and you need to inform them every single year. So Ownr helps you with the annual corporate returns to ensure that your business is compliant. We take care of the legal stuff, and you can focus on growing your business. The managed corporation plan is our higher tier plan. So it's actually $599 plus $399. So it's actually closer to $1,000. But this plan is the plan more geared towards companies in that growth stage. So if you're looking to bring on investors, if you're looking to access legal documents to help grow your business, if you need to make ongoing changes and bring on new directors and partners, this is the plan for you. So it gives you a little bit more flexibility to make ongoing changes, whereas this plan is sort of like, hey, I just want to get set up. And as a one-person business, I'm really not making many changes afterwards. So that's the way that you can look at this. Both plans, of course, will allow you to get that RBC refund of $300 once you set up your business bank account. And then you just kind of make your payment, check out, and then do your final review. And that's pretty much it. So the last thing I'll show before I jump back into the presentation is just what does the dashboard look like and what do you get access to? So to get your $300 back, you can set up your business bank account with RBC. Click here and we'll deposit the $300 into your business bank account. But you have a little bit of a business checklist here. Under your organization tab, your business number, your corporation key, your tax number, everything's all in one place. Keeps you organized. It's a really nice place to store all this information. If you need to upload documents that you've received to kind of use this as a repository for your company documents, you can do so as well. And then as you can see here, your minute book, all those corporate documents that we are generating for you that are required, they all live here. You can download them, you can print them, create a physical copy if you need to. Your shares, has a breakdown of your cap table, who owns what, so it really is a nice layout to kind of, again, keep your company all in one spot. So I hope this was helpful just in terms of orienting you to, hey, how do I complete this through Ownr, and then what does it look like at the end? And then a quick shout out to our partnerships team as well. So we do have a list of perks and partners that, as you can see here, as an Ownr user, you would definitely get access to these discounts. So QuickBooks, TELUS if you need a phone plan, Vistaprint for some of your marketing materials. There's a long list of partners that our team has brought together that are available to Ownr users. So definitely something to check out, if and when it's time to incorporate your business. So that's the platform in a nutshell. Going to jump back over to the questions to see if there's anything else that has popped up. Can you add people after you incorporate? Absolutely. So as I was alluding to the two different plans, if you start on the lower tier one, there's one-time fees associated each time you need to make a change. Whereas if you're on the higher tier plan, it's a little bit more flexible. You can make ongoing changes as many times as you want. So depending on if you're just adding one person as a director, or if you're adding them as a shareholder, officer, and director, or if there's multiple people being issued shares, one of those two plans will probably make more sense. So definitely connect with our team and we can find what the best option is going to be for you. Okay, we're in the home stretch now. Last couple of slides. I know I've been talking a lot. So I hope this, again, has been relevant information for everyone. Things to do after you incorporate: open up your bank account, as we've talked about, do it with RBC to get $300 back, pay for the shares of your corporation. So when you issue yourself shares, you need to pay for them, and then consider getting a tax number if you require that, payroll and import export as well. The tax number is probably the one we get asked about the most. Do you need one? How do you get one? So you can call the CRA directly if you'd like, and you can talk to them on the phone and they'll be able to give you your tax number. You can also request that through Ownr for a one-time $50 fee if you're on the lower tier plan. If you're on the higher tier plan, that's included. But the magic number that you need to consider is $30,000. If you make $30,000 in revenue, in annual revenue, that is, you are required to have your HST number or GST number, and then you are required to charge tax to your customers. Okay, so that's the main thing to think about. Is it worthwhile to get it beforehand, before you hit the $30,000, potentially to obtain tax credits? So that's just something to keep in mind. So yeah, I wouldn't wait till the $29,000th to get your tax number. It's definitely something to think about if you find yourself approaching that threshold. Okay, then the last piece to highlight, again, for existing companies. So if you are an existing business, one of the questions that we often ask is, do you have your minute book? Because as I alluded to at the beginning, if you incorporate through the government, you likely don't have your minute book, right? So if you don't have one and you did incorporate previously and you have that business, we can help you create one through Ownr so that you are organized and compliant in terms of your corporation. So either say, yes, I have a minute book already, if you did it through a lawyer, and you can upload that onto Ownr and then take advantage of all of the different services we offer. Or no, I don't have my minute book, we'll create one for you, and then you'll still take advantage of all the great features that we have through Ownr in terms of managing your corporation, those perks that I talked about through Ownr and those discounts, getting your annual return filed if that's not something you're taking care of already, and then just supporting further growth of your business if you bring on more shareholders, if you need access to legal documents altogether. I see that there's a question in terms of what I mentioned earlier about paying for shares. So just to quickly go back to that point, yes, when you issue yourself shares in your business, you do need to pay for them, right? If you may have seen in the demo, and I may have gone through this a little bit too quickly, so my apologies there, but let's say I issued myself 1,000 shares and those shares were at 1 cent per share. 1,000 shares at 1 cent per share, that's $10. We set it at a nominal amount so that you are able to facilitate the transaction, and you basically need to pay in order to own the shares of your company, even as a one-person business. And this can be as simple as an e-transfer from your personal account over to your business bank account after the fact. So it's not a really complicated process altogether, but it is a transaction that technically needs to happen in order to make sure that the transaction of you owning the shares of your business really goes through. Keep in mind that the price you set it at is not the true valuation of your company. You will bring on an auditor to, audit your company, and an external evaluator to determine what your actual true company value is if you need to. But the price per share that you're paying doesn't necessarily reflect that. Got another question here. Service does not charge any tax. Do I have to apply for HST if my commission is over? I think it's not. It is no use. Okay, so yeah, there are certain industries where that threshold doesn't apply. For most small businesses, it's true for the $30,000 threshold, but there are certain industries, and then off the top of my head, I don't know them. So if insurance brokerage falls under that category, it may not absolutely be required. I'd suggest speaking with your brokerage, because that's a professional service. You're licensed to obviously sell insurance. So that is a whole industry in and of itself that has a lot of rules and regulations. So I do apologize, I don't have that answer directly right now, but that's something I would encourage you to check with your brokerage on to get the best answer of whether or not you require this. All right, great questions coming through. So the last thing that I'll highlight is the compliance. I've talked about this a little bit. I've talked about an annual return and why there's like a $199 renewal fee. So what does that look like? So based on your business structure, as we've talked about, the sole proprietorship, as I mentioned, no separate legal entity. So you don't have separate tax returns and you don't have annual returns. When you have a corporation, there is a separate tax return that you need to file, and everyone knows that. Everyone always talks about, yeah, I need to file taxes, right, when I set up my corporation. But that annual return, that corporation filing, is what I've been talking about all this time. So to answer that question that just came in, when I talk about filing with the government, no, I don't mean your tax filing. Your tax filing is separate. That's going to be with your accountant. Your annual return is a government filing that is separate from your tax return. If anyone had a business prior to 2021, your tax return and your legal return were actually merged together, and your accountant would have likely done it for you. As of late 2021, I believe they kind of separated that process. That's why your annual return and your tax return are kind of dealt with at separate times. So what is the annual return then, right? Let's perfect segue with these questions coming in. So like I said, it's really to inform the government that your company is active, that you're still an ongoing business, even if you're not operational yet. And that's the same thing with your tax return. Even if you haven't made money yet, these are still filings that you need to make with the government, whether with the CRA or with the government, to just say, hey, my company is active and I am going to be operating this business. It covers three things, as I mentioned earlier: a shareholder meeting, appointing an auditor, and making sure that the directors of the company haven't changed. For most small businesses, you're probably a one-person shop, and you're asking yourself, am I going to have a shareholder meeting by myself to fulfill this, right? It's kind of odd. The answer is no, you're not going to have a meeting by yourself. You're not just going to sit at the dinner table and start the meeting. You're also likely not going to appoint an auditor. It may not be necessary, but the government still needs to know this, because these are the requirements that they have set forth as part of the Business Corporations Act. So through Ownr, and how we help you with this annual return filing, is that we ensure that the legal documents are provided for you to check off these questions that the government's going to ask you. We're going to say, did you have a shareholder meeting? Yes or no. Have you appointed an auditor? Yes or no. And by responding to these questions, we will prepare the legal resolutions that are required, that are typically done by a lawyer, as we've talked about, and make sure that we update your minute book. And we will also make the submission to the government on your behalf. But this is one less thing that you need to worry about as a business owner to be able to keep your company compliant. So more or less, again, your annual return is a legal return that needs to be filed on the anniversary date of your incorporation every year. And it really is about keeping that compliance and just that kind of check-in and upkeep that comes with the benefits of running a corporation. So before I dive into the resources, I got a couple of questions coming through. Does Ownr provide a consulting service? Not in any formal sense. So we don't offer consulting or advice in general, because especially with my team, like I said, we're the ones that are often in one-on-one calls with entrepreneurs who book with us. We make a really clear distinction that we are not lawyers, we are not accountants, and I've made that clear hopefully in this call as well. But so we can't offer you advice in that sense. But what we can do is obviously speak to the general terms of what is the process of incorporating, what are certain instances that we've seen. So in terms of support, we are here to help guide you through this process. If you need someone to walk you through, answer common questions that you have, I've done that many a times where I just sit on a video call with folks. I answer their questions. We go through the platform together, and they're able to incorporate, within the 15-20 minutes allotted in our booking. So all that to say is there's a level of support that's certainly here that we can speak to in terms of Ownr's platform and just the process of incorporation. If there's any specific legal advice that you require or even financial advice, I would encourage you to speak to an accountant. So for example, how do I set up my share classes? That's not something that we'd be able to answer. We can talk about in general how share classes are set up and what small businesses might do and what the standard is. But that's not something we can offer you direct advice on. So I hope that answers your question there, Hatton. But yeah, in terms of using the portal to set it up yourself, we try to make Ownr super user friendly so that you are able to do this on your own. But at any point, if you need that support, we're here to help. And sweet. And then going back to that one last question, can you register a company as a holding that would have an operation company as a sole prop? So as we've talked about with a sole proprietor is a one-person business and it's really owned by yourself. It can't be owned by someone else. So you wouldn't necessarily have a corporation owning a sole proprietor, right? A corporation, as we've talked about, as a holding company, can hold another corporation as a shareholder. But as a sole prop, it's a one-person business. Whoever started that business is the person who runs it, owns it. There's really no transfer of ownership or overarching company that is able to own it in that sense. So great question there. And and again, I know it's a common question just in terms of what are the different structures of running that business. So we are on the very last slide here. So some amazing resources that really a lot of the questions that I've answered today can be found in our blog centers and in our help articles as well. So through Ownr, definitely check out our platform. We run a series of our webinars as well. So there's content. Check out our YouTube channel as well. A lot of information on these common questions that we've talked about today. I've highlighted our Ownr perks already. So again, as an Ownr user, over $15,000 in potential savings on other business services that are applicable for small businesses. So please take advantage of that. I'll highlight again, as an RBC company, if you set up your bank account with RBC, your incorporation is really almost cut in half. It's like I said, $500 or $600 to incorporate in Ontario, get $300 back from RBC. You're paying pretty much the same as you would with the government, but you get the support from us. And we help ensure your minute book is properly set up. So that's a huge win, to be honest, when it comes to doing this properly. And then, like I said, with the coupon code YSpace20, use that at checkout. Obviously, really appreciative of everyone taking the time to join us this evening as the late hours and as the sun goes down, it gets a little bit darker, but I recognize that I might be standing between you and dinner. So definitely take advantage of that. Yes, use that discount code. I'm happy to stick around to see if there's any other questions or concerns that are coming through. I know that we were talking to folks, in kind of all different spaces of starting a business, most folks just thinking about that opportunity. So I hope the session today gave you some context and gave you some insight into, hey, do you start off as a sole prop? Do you consider incorporation right off the bat because of the level of risk that you're finding, the industry that you're going to operate in? If at any point you need to book a meeting with us, feel free to do so. I'm going to drop my email into the chat right now so that if there is anyone on this call who wants to reach out and has a question, just ping me and I'm more than happy to reconnect with you at a later time. But yeah, that's all I've got for everyone today. So thank you very much for attending. Like I said, happy to stick around if there's any last minute questions. But hopefully this was very beneficial and helpful for everyone involved.
It really was, Kelvin. Thank you so much. So if there are any questions, please feel free to drop it in the chat box, or you could also just raise your hand, unmute yourself, and ask your question directly. But yeah, Kelvin, thank you so much for the presentation. I'm sure everybody found it extremely beneficial. And with incorporation, it's such an important topic, but I know to founders, it also seems very daunting. And you broke it down and made it very simple. So thank you so much for that. I do have a question for you. While you were going through your presentation, you said that Ownr also takes care of some legal documents when you enter your assigned roles. In the company, it prepares legal documents. So I'm wondering, in terms of setting the shares, does it also do shareholder agreements?
Yeah, absolutely.
Go,
That's a
go.
great question. Yeah, so for companies a little bit further along in the journey, right? So for those who need access to legal documents, who need to manage their shareholders, that is absolutely possible through the Ownr platform. That is on that higher tier plan that I was alluding to, the managed corporation plan. So again, if we're breaking it down, lower tier plan, simple setup, just want to get incorporated, not many changes. Higher tier plan, that flexibility to make ongoing changes in anticipation of shareholder changes, needing access to a shareholder agreement. So one way to just frame the value of that, a shareholder agreement can go upwards of $1,000 just through a lawyer. You get that and your full incorporation and access to all of the Ownr legal documents and such for pretty much the same price when you're on the managed corporation plan. So that goes a long way to being able to help deal with vesting shares over time if you need to give a little bit at a time for investors into your company. So yeah, the short answer there, we talked about ownership management, right? Transferring shares if someone leaves the company, the ability to maintain the business beyond yourself. That's absolutely something that we were able to do. And the most important part, we make sure that the right resolutions and corporate documents accompany that transaction. If I issue you, 50% of the company, you will sign a document that says, I am now owning this. I'm going to pay for those shares. And if you leave the company, we're going to pay you for those shares that you're about to transfer back. So those are absolutely, that's absolutely something we're able to take care of.
Amazing. Great. Thank you for that. And Lee has a question. Does Ownr handle equity warrants?
Yeah, that's a great question. I'm going to quickly and just say no because I have not heard of equity warrants previously myself. I'm just taking a quick look here. Uh, just, okay, so there are different types of documents that are available through Ownr for financing in terms of bringing on investors. So I haven't necessarily heard the term equity warrants before, but we have things like safes and convertible notes through Ownr that allow percentages of a company to be exercised and shared with a potential investor for an initial investment. So we do have those tools available through Ownr. Again, equity warrants is not something that I've personally heard of, but there are similar vehicles. Obviously, each one has their own financial and technical implications. So if is interest in accessing safes and convertible notes through Ownr to figure out, hey, how can portions of a company's equity be dispersed over time and at different checkpoints and different milestones. Those are different tools we have available, and happy to take that further if there is actual interest in seeing how that looks on the Ownr platform. See, there's another question from Dominic. Pay yourself in terms of dividends instead of wages? Absolutely. Three main ways to pay yourself out as an entrepreneur: a salary, right, recurring biweekly salary that you get, a wage if it's like per hour for certain levels of work, or through dividends, right? So through a corporation. To dive into that a little bit deeper, right? Dividends are paid through the shares that you own in a company. So if you own, for example, Class A shares and you pay a dividend, dividends are paid to share classes, not to people, right? So anyone who owns Class A shares, for example, would be paid that dividend relative to how much percentage they own. Right, so just as an example, if Alina and I started a company, she has Class A, I have Class B shares. If we issue dividends to Class A, she gets all of it because I have Class B shares. But if we both own the company and we both have 50% of Class A shares, if we issue a dividend of $1,000 to Class A, well, that gets split in half because we both own 50%. I get $500, she gets $500. So that's one way to look at it. But in terms of can you pay yourself out that way? Absolutely. Speak with an accountant to figure out what the best way it is to pay yourself out relative to, of course, the amount of money that you're making. Yeah, if you choose to register your company as, not sure what OPCO is. So if you want to expand on that, that'd be great. Operational company, gotcha, because holdco is the inverse there. Okay, if you register your company as an operational company and choose to make changes to make it a holdco, would it be another registration? Not necessarily. It's certainly something that you should notify the bank about, just in terms of just the way that money might be flowing in. But ultimately, once you have a business, right, it can be operational, but if it needs to be a holding company because you transferred it, and just in terms of your day-to-day usage, it's at your disposal to utilize. So you should be able to use it as such. It may not necessarily be another registration unless it makes sense for it to be another registration. But again, that's something that I would encourage you to chat with your accountant about, just to figure out, like, as an operational company, what has been done? Does it make sense, or can this be kind of operationally switched over to a holding company where all your operations basically kind of cease to exist, right? What does that transition process look like? So, long way to say, generally speaking, once you have a corporation, you can utilize it as you need to. But from a financial perspective and logistically of how you make that switch over, chat with your accountant to say, hey, I have an operational company. If I want to switch this to a hold co, is there anything I need to be aware of from tax implications, and things like that? So that's what I can say to that front.
Great. Thank you so much for that, Kelvin. Are there any more questions? All right. While we see if there are more questions, I'll quickly share my screen. Okay, just give me a minute. Perfect. All right. So while you, can you guys see my screen or is it blank?
I think it's blank right now.
Oh,
Yeah.
what's happening? Sorry about that. I don't know why my computer's acting up. Anyway, I just wanted to share our next session. Next Tuesday is going to be on SHRED funding and government incentives, another great session. If you're interested in tapping into what funding is available and what government incentives you can take advantage of, please do log in at the same time next Tuesday. Oh, there's another question for you, Kelvin, in the chat.
Yeah, I see that, and obviously a lot of questions here from Jerry, I believe. Sorry, my apologies if I mispronounced your name. So feel free to email me, because a lot of these obviously being more pertinent to your individual situation. But I can answer this really broadly. Adding your wife to your business, is that possible? Absolutely. Is it a problem? That's not necessarily something that again we can have the answers to right away here. There are financial implications. Whether or not you're adding her for income splitting, if her role is going to be a director in the company, does she have a full-time job? Are there issues with any contractual conflicts in that sense? So there's a lot of questions that we'd have to dive deeper on. So feel free to email me. But just generally speaking, can you add someone to the business after the fact? Absolutely. What the implications are will vary, scenario to scenario. So happy to dive into this a little bit deeper. But truth be told, again, I know I've said this, I sound like a broken record, but chatting with your accountant on your specific situation is probably the best way to figure that out.
Great. Thank you so much, Kelvin. I think that brings us to the end of our session. If there are any questions, feel free to reach out to Kelvin directly, or you can also email me and I'll make sure to pass along your questions. Kelvin, on behalf of YSpace and Markham Small Business Center, thank you so much for your time, the effort that you put into this session. I'm sure all our attendees found it extremely beneficial, so thank you so much. I would also like to thank Terran Carr, Head of Partnerships at RBCX, for helping us in putting together this session. So thank you, Taryn, for that. To all the lovely attendees, thank you for coming out on a Tuesday evening. Thank you for all your questions, your conversations, and the engagement. I'm sure everybody really had a great time in today's session. I hope to see you all next Tuesday as well. Kelvin, thank you once again. Thank you, Wendy. Thank you, Markham Small Business Center. Everyone, have a wonderful evening.